Well, ladies and gentlemen, all in crypto here, and welcome back on the CPI day for another daily cryptocurrency market update. Of course, we're going to be looking at that. It will come out officially at 1:30 p.m. UK time, which I think is 8:30 Washington time, 8:30 a.m. Washington time. And we will look at that to start things off because it's the CPI day. You've got half an hour after this video goes out for it to actually commence, and we'll look at kind of what's expected, what's going to be affected, all of this kind of stuff. You know, in these daily market updates, we don't just look internally within the cryptocurrency market, although we do that, but we often spend quite a bit of time looking at external markets. You know, markets are driven by liquidity. Liquidity is manipulated by the Fed, so on and so forth. We know how we've ended up with the bull market of March 2020 onwards, with the huge liquidity injection from the Federal Reserve and other central banks, and then the bear market that came at the end of 2021, which was again caused by the central banks. And now we're trying to work out what's the play ahead. And of course, the CPI is very fundamental to that. It's the whole reason why they're raising rates. It's going to be an interesting one. And really, for me, more so than the actual print, I'm interested to see how the markets react. Because if you get a higher than expected print, just to quickly break it all down, then we've got some really interesting things to get into, guys. We're going to be looking at the Bank of England. We're going to be looking at the Fed saying the banking system is sound. And then, of course, yesterday, you had the magnificent President Joe Biden post on his Twitter that they think Congress should cut tax loopholes that help wealthy crypto investors. Now, this tweet has done nothing but confuse me. As with everything that Joe Biden tries to say, I wouldn't even say says. And bearing in mind, I'm not political, guys. I think they're all as corrupt as one another. They're all batting for the same team, and they've really just tried to divide you in the process. But that's just my own personal opinions. But we'll look at this. And then we've got some other interesting things going on. Talking about the job market. How does he do it? I mean, really, you know, this guy's created more jobs than 3 or 4 presidents put together. And then, of course, we'll look at Binance launching a Capital Connect platform for VIP users, connecting crypto with institutional corporations. This is all still to come. When we talk about DeFi, and we're going to be releasing an interview we did with Prime Protocol, who just had their mainnet yesterday. Prime Protocol is a cross-chain DeFi application that does things in a different way and eliminates bridges. We spoke about something and we said, hey, one day your DeFi applications won't just have crypto in it, but they'll have real-world assets on it. How exciting is that? And you can deposit, and housing may even be one of those real-world assets that you can use to leverage other assets. Now, that sounds very dangerous, and I'm sure it will be, but it's a very exciting future that we're moving towards. So let's just start off with a Bitcoin chart. You guys know the plan. We are bulls on the crypto space. We've been bullish since the start of the year, and we think that Bitcoin, crypto, the total market cap, gold also, and there's a good possibility the stock market is going higher this year. Now, we've derived this from looking at rates going sideways, which is a period that we think we are, if not in, very, very close to, and that markets will do well on the back end of sideways rates. Go and look at what's happened with sideways rates, the 2-year yields topping in historic context when you've had a very harsh monetary regime. Going into it, and then that topping, markets typically do well until a crash occurs, which is likely, or which is predicted by the yield curve. Usually doesn't happen until it's uninverted. It's currently very inverted. And of course, a pivot, which a pause is not. People get very confused and think that a pause is a pivot. Pausing at 5.25% rates, that is not a pivot by any stretch of the imagination. With the amount of debt, and yes, we've got interest rates higher previously, but people often underlook the money supply. You have so much more debt today than you've ever had. That's why we're seeing issues in the banking sector. It's why we're seeing issues in with the debt ceiling, which is going to get raised. The fact that they're actually kind of saying, oh, you know, we might just let America default on their debts, and people believe that shows, I think, I wouldn't say a lack of understanding of financial markets, but more of a kind of you know, do you really think that that's going to be the option that they go down? Certainly, if America's main mandate is to maintain its kind of role and position in the world stage. So we're essentially bullish, and that's our macro reason. Technically, we've got targets to 35k and 40. Does that occur with first a retest of this neckline? Or you'll find this, go and look at your trend lines. they always, or I wouldn't say always, I cannot definitely not say that, but they very commonly get retested. So this is still a bullish scenario. You're invalidated if you run this right shoulder. This pattern is thrown out the window, and then you're looking for double bottoms. But ultimately, even in the short term with the CPI, I think if you can hold this low down here, you should be all right. You know, this could set up for more continuation. Providing you don't sweep this low, sweep the low, look for 25k. You break that, of course, look for your next levels. But providing we don't smash 25k and hold below it, we still think that's a bullish scenario. And ultimately see Bitcoin getting to 30, 40k plus this year, and altcoins doing well. Bitcoin dominance had a great run. Whether that's overcooked or not, we can maybe look at in a separate video if that's what you want. This could just still be a deviation of the range, and it could be heading back down, but we will see. So we got the CPI today. Let's look at the kind of tradingeconomics.com stats. Of course, the last CPI print we had was 5. Markets enjoyed this. There's a lot going on because of the banking sector, which apparently is, according to Fed's Williams, the banking system is sound and resilient and quite strong. Because of the banking sector, for the first time, and I think markets front-run this and enjoyed it, and certainly your anti-fiats very much enjoy when you have sort of fiat issues. Because of the banking system, we actually saw for the first time in over a year, they injected more liquidity into the markets through obviously bailing the banks out and adding to their balance sheet. The question is that going to continue? We can all speculate on that. It looks likely. A lot of banks under a lot of pressure. We're likely to see more and more of it. I don't think maybe that's the demand destructive event because the Fed's already shown their response to that, and that's just to basically bail them out, which is very different to 2008, 2009. In regards to the time period that it takes them to actually bail them out. But looking at the CPI coming up, 4.9% is the sort of consensus, or the medium is around about 5. So they've essentially got CPI not moving for that for this month. Now, I don't really know how market's going to take that. I think if it was a lower print than that, you know, anything under 4.9, I think they'd kind of enjoy. I think 5, doesn't really give that much direction, but this is why I'm interested to see the market reaction. Because that, I think, will give a good general sentiment of everything, is how do the markets react, even if it's something like 5, which in my opinion shows a sticky inflation. And then, of course, a higher than that number, of course, one swallow does not a summer make, so anything 5 and above, 5.2, 5.1, which you've got the likes of Citibank calling for, Morgan Stanley, Goldman Sachs, then I think that would, it's going to be really a case of seeing how the market reacts. But theoretically, that should see risk sell off with the increased probabilities of interest rate hikes. You should even see gold sell off, and you should see the dollar catch a bid. Remember, we've been looking at the fact that the dollar is at support, gold's at resistance. The S&P is interesting because I think and this is something for me, the charts for me are king. And I've learned this over time because they will show you what the insiders are doing before the news ever breaks. You've got to remember, insiders are privy to news. What do human beings care more about than really anything, barring very small few things, and that's money. And they'll move to protect that before the masses kind of do. So if I just took these charts on the S&P, Bitcoin, gold on their own merit, and didn't listen to the kind of doom and gloom news, I think really that there's a bullish outcome. Of course, we're at resistance. Nobody's denying that, but you can very much push through resistance. And resistance I've always thought of as a hurdle in a bull market. Often when you run up to a hurdle and you stop static parallel with it, you don't just want to jump that hurdle from there. You want to take a few steps back, maybe even get a little bit of a run up to clear that. And I think that's what Bitcoin's largely doing around the 30k level. S&P could be doing that right now. There's kind of you've got the same DNA with Bitcoin and the S&P. And not really gold, but quite a few assets that's kind of the opposite to the dollar that could just be setting up to break things. But this CPI number and how the markets take it, I think are going to be very, very interesting. And again, rule of thumb, higher number, bad for risk. Crypto, Bitcoin, gold, good for dollar. Lower number, good for Bitcoin, crypto, gold, bad for the dollar. Moving on, guys. So now you know what to expect. Half an hour after this comes out, some of you may be watching this video a little bit later, and you can see if it's played out. Bank of England is set for the 12th straight Interest rate hike, but the outlook remains murky. I have completely lost all faith in the UK government. 100% lost. I don't think I've ever had really that much faith, except for when I was a kid and I didn't really understand it. But as an adult, I find it completely shocking what's going on in the UK. I mean, we're supposed to be this kind of developed, world, and it just seems insanity what's going on. You've got insane inflation. True inflation has UK inflation at 15 point something percent. In the US, true inflation has it at 3.8. So they're not fighting inflation with rates at all at this point where we're currently sat. However, they're continuing to do it. So the consumer is getting all their money inflated and their wages inflated and having to pay a higher rate on everything. I mean, I question what the hell is going on. You are destroying your citizens. And you know what the worst part about it, and maybe I'm a hypocrite for saying this, the worst part about this is that we just sit there and take it. We should be going nuts at what's happening right now because your life, your livelihood, you are getting directly affected by this in a horrifically negative way. Yesterday, I saw a report that 700,000 people missed payments on mortgages and rents last month. That's the government's fault. That's the Bank of England's fault. If you look at the whole sort of, mortgage system itself, I mean, Anyway, so they're set to continue to raise rates. And this is the real question. And this is why I don't hate on the bears at all. I'm a bear when I've got to be bearish. I'm a bull when I think I've got to be bullish. But I can see, and it's a complex environment that we're in right now, the most complex environment I've ever been in. And it seems kind of hard for me to be bullish in this environment, but I am. We've shown you the reasons why. But why I don't hate on the bears and I actually sympathize with them quite a bit is because you can understand with the consumer being wrecked, and Amazon is potentially, and oil is a great representation of the economy generally, which is looking to see further downside. Amazon is another one. Amazon looks like shit. Apple looks great though. So I think the S&P, the US equity market, good luck guys. I don't want to play in that market. I don't really, have enough of an insight into it in regards to understand exactly the breakdown of the S&P and the ETFs and everything. However, I've got a good understanding of markets generally, which we're applying here. But I understand why the bears are bears. I really do. I just think the bull case outweighs it. Of course, banking system is supposed to be strong. This I found just quite frankly shocking. This extremely strong labour market. Actually, if you look at the last month's labour market, it's very easy to predict what the figures are going to be if you understand what they want the figures to be to do what they need to do. If you believe that your government doesn't lie to you, how many more examples do you want at this point? I mean, really, and I'm not here defending someone else over someone else in regards to the political sort of regime. I think they're all broadly corrupt, and I don't think they'd be allowed to get into that position. Maybe one has, who knows, if they didn't kiss the ring. Just my own sort of take, but isn't it interesting how Biden's managed to do this? Now, of course, you got to remember, country was locked down, so on and so forth, so maybe there's a bit of an explanation in that. But this was a confusing tweet, like with everything Biden says. That's not an insult. That's just go and watch some of his speeches. I mean, I can't even understand it, right? Don't get me wrong. Anyway, we think Congress should cut tax loopholes that help wealthy crypto investors save around about $18 billion. Okay. Here's what those wealthy, if you have that kind of money to play with, or you're one of those wealthy crypto investors, you're just going to bugger off. You're going to go to Dubai, you're going to go somewhere else. And that's what we're seeing now. Even Coinbase exploring it. And Coinbase have really adamantly said that they want to be in the US. And they should be championed for doing that and trying to be compliant. Instead, they're getting penalized. Mega Republicans think Congress should cut food safety inspection, okay, I mean, by $15 billion. We don't need to guess what mega House Republicans value. They're telling us. I don't really even know what to take from this tweet. What loophole are you talking about? Because first of all, you've not even given any clear guidance on crypto whatsoever. Look at your own chair of the SEC. He doesn't know what day it is, according to being asked if Ethereum is a security or not. How you can be in office? Sorry, guys, this is a ranty video. How you can be the chairman of the SEC for years and still not have worked out, when you actually taught cryptocurrency courses, blockchain courses at MIT, if Bitcoin's a security or not. Are you stalling? Potentially, maybe that seems like a logical thing. Like with the XRP case, I actually think XRP, and I hate a lot of the nonsense that gets put on Twitter and YouTube in regards to XRP, but I actually think XRP will do very well one day, right? I really do. Real world use case, along with Stellar, along with a couple of others out there that look at the remittance market. But the XRP case, one thing that has really shone through to me is that the judge keeps going to the SEC. Okay, you've said this, but where's the evidence? You've got to prove it, and then it just kind of falls apart on that. So very interesting. And then of course, Binance launches Capital Connect platform for VIP users. Binance has launched a new platform called Capital Connect to facilitate connections between its VIP clients and investment fund managers. There was a high demand for such platforms, Binance's Catherine Shen said. So this is the world we're moving towards. This is a 10, potentially $100 trillion asset class, in my opinion, the cryptocurrency market. And right now it currently sits, not sure what I was showing there, at a measly 1.1 trillion. When you understand the revolutionary properties that blockchain bring to the world, and we're constantly seeing large institutions move into the crypto space and continue to lick their lips eagerly upon the waiting of regulations to get in, it's a very clear picture. This time down here, and we've taken that bet, I believe is certainly the best shot at accumulating crypto for the long haul that we've had thus far. Does that mean I can guarantee the absolute low isn't in? No, I can't. I just think it is. So that's what I've got for you guys. CPI expectations laid out. These are some of the ones. Gavin's actually a really good guy to follow, I find, for traditional markets. Obviously knows what he's talking about. And yeah, we'll see. The more interesting thing than the print, I think at this point, although the print is extremely interesting, is the market's reaction. Because at this point, are the markets calling the Fed's bluff? And this doesn't look too bad in terms of just on the merit of the chart. I just can't help but feel like this is going to roll. And 2-year yields does this. Rates go sideways. That's what we want. Remember, 2-year yield leads rates. And I think the markets do this and climb out of it. And you get something like that happening. Also, you could see that playing over with the dollar. We've done Bitcoin dollar, Bitcoin at resistance, dollar at support. I think you're going to see this kind of crossing, if you will. So apologies for the ranty video, guys. Just got a lot I wanted to say. Please don't, if you're a fan of one presidential party or another, think that I'm being political here. I'm just saying things as I see them. And ultimately, my intentions are not to offend anybody. So please take that for what it is. On that note, I'm going to love and leave you. If you've enjoyed the content, like us, always appreciate it as a comment. And I'll catch you all in the next one. Thanks a lot for watching. See you in the next YouTube video.